So Jesse, you're now being recorded. I will share this with the other 1A sections that I have. So just to let you know where I put those videos. Have you been watching any of the videos that I've made?
Yes, I try to go over them as much as possible.
So right over here. So when we're dealing with bank reconciliations, what we're really trying to go through and do is we're basically balancing what we have on our books versus what's on our bank balance. And what we have to kind of do is we need to go through and essentially make adjustments on both sides to come up with the ending reconciled balance. And when we're going through, so on a bank reconciliation type question, the first question I will give you will say, what is the reconciled bank balance? So that's the first thing. The second thing that I'll do is I will ask you to go through and make journal entries for the company. We do not do any journal entries for the bank, but you'll be doing journal entries for the company. So that's kind of what we're going to be going through and doing, and this is our sample problem. So let's take a look here. And I think I tried to make this pretty comprehensive. So let's take a look at this here. So on June 30th, 2019, Sonuri Inc. received a bank statement showing the total cash balance was $200,750. So my bank balance as of June 30th, 2019 was $200,750. Make this a little bigger. Okay. So it says over here that the bank balance, the bank statement, the balance per SI's books was $185,950. So my balance per books was $185,950. So what I'm going to try to go through and do is to reconcile these two items down to an adjusted balance. So the first one right here was that the bank statement showed interest earned during the month of $500. Okay, so if the bank statement is showing interest earned, that means that it's already included in this bank balance right here. So what I need to do is I need to show that interest earned on my books. So what do I want to adjust? Do I need to adjust the bank or my books?
Your books.
My books. And so am I going to increase my books or decrease my books?
You're going to increase your books by 500.
Interest earned. So this is going to be a positive 500 bucks. Okay. All right. The next one here, and we'll just call this over here. This will just be letter A. So letter B, the bank statement showed a service charge of $25. So if I have a service charge of $25 in my bank statement, what am I going to need to adjust?
You're going to have to decrease it by $25.
My book or my bank balance?
Your balance or your books.
The book balance, correct. So my bank service charge, being showing here a decrease of 25, we'll call this letter B. Okay, so over here, the bank correctly cleared a check that related to supplies expense for $5,000. However, I incorrectly recorded this as only $500 on my books. So there was a check that was properly done by the bank for $5,000. I incorrectly recorded this on my books for $500. Okay. So what do I need to adjust? Do I need to adjust my bank balance or my book balance?
Your book balance.
My book balance. And what am I going to have to do here for the adjustment?
Do I need another expense of $4,500?
Correct. So when I do this expense here of $4,500, the total amount of my disbursement will then equal $5,000. So adjust incorrect. We'll call this a book error. I'm going to show this as a negative $4,500 because I didn't record the proper amount of expense. Okay. All right, let's take a look at letter D. So letter D, the bank correctly cleared a check for utilities expense for $7,000. However, I incorrectly recorded $7,700 on my books. So if the bank correctly showed $7,000, but over here I had $7,700, what am I going to need to, what do I need to fix?
Gonna add $700 to cash.
Correct. I'm going to add $700 to my book balance for cash. Over here, you're correct, because I should have only taken 7,000. I took 7,700, so I need to add this amount back. Does that make sense?
Mm-hmm.
Jesse, you good?
Yes.
Okay. All right. So then over here, the bank returned a check for $25,000 that had non-sufficient funds. So I deposited a check. The bank said, no good. So what do I need to adjust?
Return to check.
So non-sufficient funds check is when I deposit a check at the bank. The bank says, nope, there's not enough money in that account that you presented to clear it. So I'm returning the check to you, non-sufficient funds.
Mm-hmm. So the money comes back to you?
So what's going to happen is I need to reduce my book balance because I'd show this as a deposit, and then the bank returned it non-sufficient funds. I'm going to call this NSF check. I'm going to reduce my book balance by $25,000.
Okay.
Does that make sense?
Yes.
All right. And that is letter, right over here. Okay, this is letter E. Okay. Letter F. The bank erroneously recorded a $35,000 deposit to my account. So, do I need to adjust my books or do I need to adjust my bank?
You don't adjust for the bank, correct?
Correct. So over here, there's $35,000 that should not be mine.
Mm-hmm.
So I'm going to put over here, call this bank error. All right. So my next one here is the bank erroneously reported an $8,000 withdrawal against my account. Okay. So if they deducted $8,000 that they should not have, what do I need to do?
Get that money back.
Yep, so I'm going to have to put in 8,000 here.
Mm-hmm.
This 35,000 is letter F, and this is letter G. Okay, does that make sense?
Yes.
Okay, the next one over here is I had outstanding checks of $27,125 that had not cleared bank. So what do I need to do here? Do I need to adjust my book balance or my bank balance?
You have to adjust the bank balance.
Yep, so I'm going to have outstanding checks. And this is going to be here for a total of $27,125 for letter H. Okay. Now, what about the deposit that I mailed that had not yet been received by the bank? What do I want to
do? You'd put it on there as well for the bank.
Deposit in transit of $11,000. Okay, and this is letter I. So what I'm going to do at this point is I'm going to add up here, I'm at my total adjusted balance. I'm going to add up all these here. And over here. And so I've just gone through and I have balanced my books. Or I should say I have balanced my checking account to my bank account. Does that make sense?
Yes.
Okay. So the next part here, what I will ask you to do is I will ask you to do journal entries. And when you're doing journal entries, we are only going to do them for the book side. I do not care about Wells Fargo, right? I only care about the Bank of Lomeli, right? So right over here, what I'm going to do, I'm going to have a date, account, debit, credit. Go ahead and do up some journal entry forms here. So Jesse, how's everything been with you? All is well?
It's all right. Can't complain.
There you go. Seen the Joker movie?
I've been wanting to. I'm waiting until it comes out on DVD, though. Don't want to.
It's pretty amazing.
Yep.
So, right over here.
Batman movies have a history of attracting the wrong crowd.
You here? Stand outside of Newman's Hall. Is he right?
Is it?
Are you okay?
Yeah. It's
kind of hazy. Probably just some latency with the Wi-Fi, probably.
Okay. Perfect. Okay. So when we go through over here, when I'm doing journal entries, I will just have to do them for my books. So the first thing I do is whenever I do a journal entry here, if I see a positive sign on cash, that means cash is going to be debited, right? If I see a negative amount, what I'm going to be doing with cash is I will be crediting it. So in all these different items here, right, I can basically go ahead and kind of prepare myself. Okay, and then over here, $700, and then I'm going to be crediting cash for $25,000. So what you'll be asked to do for this type of question is the first thing is show me the adjusted balance. The second thing is going to be to go through and to do the journal entries. So my first one right here is going to be on June 30th, 2019. I'm debiting cash, and what do I want to credit for 500?
Interest revenue?
Interest earned, or to say interest income. And my description is going to be to record interest earned during the month of June, something like that. Okay?
Mm-hmm.
Does that make sense?
Yes.
Okay. My next one over here is for my bank service charge. So for this one here, I can just call it bank service expenses or bank service fees. I'll debit that there for 25, and this here will be to record bank service charges. That's it. Okay, for letter C, this is going to be a little bit different because when I come over here on June 30th, 2019, I need to look at what this error was for. So the bank correctly cleared a check that related to supplies expense for $5,000. However, I only recorded $500. So I needed another $4,500. So what account do I want to debit for letter C? What does this $4,500 relate to?
It was for them. You didn't record it properly.
Right, but what was the account that I should have recorded it to? The bank correctly cleared a check that related to supplies expense, right?
Mm-hmm.
So when I do the journal entry, I'm going to need to go over here and say supplies expense. Does that make sense?
Yes.
And this over here will be to properly record supplies expense. Sound good?
Mm-hmm.
My next one here is letter D. which is the bank correctly cleared a check for utilities expense for $7,000. However, I incorrectly recorded $7,700 on my books for utilities expense. So what do I want to do here? What account do I want to credit?
Utilities expense.
It's over here. Okay. And that's it. So again, I'm basically, if you see a positive number, it's a debit to cash. If it's a negative number, it's a credit to cash. Now for this last one here, which is the NSF check, which is for the non-sufficient funds, what I'm going to do is I'm going to reinstate the receivable. So I'm going to say accounts receivable. And what's really important to go through and kind of remember here is that I basically, if it's an NSF check, it means a client gave me money for an amount that they owed me. So what I would have done is I would have debited cash and credited accounts receivable. However, here, because the check bounced, I have to credit cash and then debit accounts receivable because that client still owes me the money.
Okay.
Does that make sense?
Yes.
Okay. So this is like a bank rec question. Okay, so that's this first one here. Okay, so that's a big portion in terms of like looking at your test. You will have something that's like this on your exam. Okay, so let's see here and find, let's kind of talk a little bit about receivables. Okay. Okay, here we go. Okay.
How many people usually show up to the review sessions?
None. I mean, I will get, sometimes I'll get like one, or I shouldn't say none. I'll sometimes get like one or two people. I really do this for your class, being that it's online. And it's just something that I think that the time might be difficult for some people to make. But it's just really the only time I can really do it unless I'm scheduling something special on a Sunday.
Yeah.
So, okay, so here's an AR question. Okay. So when we're going through and when we're looking at accounts receivable, and let's just kind of take a step back here for a second. When we have accounts receivable, what we're trying to go through and do is we have accounts receivable that's sitting on our books, right? However, a lot of times I may not be able to go through and collect pretty much, you know, everything that I have like listed on my books. And I'll just kind of go show you a quick, we'll go over here to sec.gov. Okay. If we go to company filings, we'll take a look at Facebook. Okay, if I go to Facebook and I look at accounts receivable, what you're going to notice right here is with accounts receivable is that it shows accounts receivable, right? So it shows accounts receivable net of allowances of 295 and 229 as of June 30th and of December 31st, 2018. So what this means is that 7.5 billion is not the true number. What it is though, is that this is after we've basically have deducted what we call this allowance for doubtful accounts, or what we are not expecting to actually collect. So if I come over here, like, so when we have accounts receivable, right? So in the last exam, we were going through and we were recording AR when we sold inventory, right?
Mhm.
So what I need though to do is when I'm showing my balance sheet, what I need over here is my allowance for doubtful accounts, or what we call the ADA. And it looks like we have somebody else joining us. So is that Tivy?
Yes,
Hey Tivy, what's up?
good,
How are you?
good.
Cool. So we just went through and did a bank rec, and now we're going over accounts receivable.
Okay.
So with accounts receivable, what I need to do on my balance sheet is I need to show the investor, here's my total accounts receivable, less what we call, this is what we call a contra asset account, right? So it's similar to accumulated depreciation. So I'm going to show accounts receivable less my allowance for doubtful accounts is going to give me accounts receivable net. So that's what this is right over here. So that's really when I'm going through and doing these questions, what I'm trying to go through and to deal with is this allowance for doubtful accounts. So let's kind of go down here and take a look. So we've got over here, and when I'm looking at my allowance for doubtful accounts, the way I'm going to go through and approach these problems is the first thing I'm going to be doing is I'm going to be computing what should the ending balance be in my allowance for doubtful accounts. So how do we figure that out? Well, right over here, what I would do on an exam is I would give you something that looks like this. I would tell you accounts receivable by category, and then I would tell you over here what percent of it am I not expecting to collect. There are two different ways for determining the ending balance in the allowance for doubtful accounts. The first one is called a percentage of accounts receivable, where I would just take the 700,000, multiply it by a percentage, and then I would put that value here. The second one is a little bit more refined. When I'm going through and doing this, I'm aging my accounts receivable by days past due. And this is kind of with the thought process that as accounts receivable stay out longer, my ability to collect decreases. So right over here, if I have AR and my percentage uncollectible, the first thing I'm going to go through and do is to figure out what should my ending balance be in the allowance for doubtful accounts. So the way I'm going to figure this out is I'm going to take the AR, multiply it by the percentage that is not collectible. So right here, I'm going to get 100,000 times 1% or $1,000. It tells me here that 200,000 of my AR, 2% of it will not be collectible. This 300,000 here, 4% will not be collectible, or 12,000. And then over here, this will be 4,000. And then over here, I've got 15,000. So when I add up these five values here, I get a total allowance for doubtful accounts ending balance. Now, it's very important to remember on your exam, I will be giving you generally just this. You will have to figure this part out on your own. So my ending balance in the allowance for doubtful accounts needs to be $36,000. So my total in terms of a balance sheet presentation, my total accounts receivable here is $700,000, right?
Mm-hmm.
However, I am predicting based on my analysis here that I will not be collecting $36,000 of that. So what I'm going to do is I'm going to subtract this 36,000 for this credit balance here in the allowance for doubtful accounts, which gives me accounts receivable net of the allowance of 664,000. Okay. So this, when I see AR net, net means net or less AR less the allowance for doubtful accounts. Does that make sense?
Yes.
Okay. So what I then need to do is it's asking me here to prepare the journal entries for transactions A and B. The next thing I need to do is to go through and record bad debt expense. One of the other things for me, though, right here is that the problem tells me that the allowance for doubtful accounts had a beginning credit balance of $5,000. So I'm going to put that here. This is my beginning balance. Okay. How are we doing?
Good.
Okay. So let's go through it over here, and we're going to prepare the journal entries. So when we do the journal entries, there's really two things that you're going to be responsible for. The write-off of an account, or actually I should say three things. The first one's going to be the write-off of an accounts receivable. So right over here, when I'm writing off an account receivable, what I need to go through and do is I'm going to go ahead. So here on 5/1/17, when I'm writing off an account receivable, the way I do it is I'm going to credit accounts receivable, right?
Mm-hmm.
Then what I'm going to be doing is I'm going to be debiting the allowance for doubtful accounts. So here, when I write off a receivable, I'm going to debit the allowance for doubtful accounts, and then I will be crediting accounts receivable for 2,000. So right over here, this is to record the write-off of AR to Von Mo. Okay. So right over here, so when I look at the allowance for doubtful accounts, I'm debiting this over here for my 5/1/17. This is for my write-off of the account receivable. Does that make sense?
Mm-hmm.
Okay. The next type of journal entry I'm going to have is I collect a receivable previously written off. So over here, when I have this type of situation, okay. So on 7/1/17, there was a $3,000 receivable that from Sandoval Panda that had been previously written off that was subsequently collected. So what happened originally was when I wrote off the receivable, I debited the allowance for doubtful accounts and I credited AR. So when I'm collecting a receivable that I previously wrote off, I need to reverse the curse, debit accounts receivable for 3,000, and then credit the allowance for doubtful accounts for 3,000. Now, the second thing that's happening here is I'm collecting the money. So, debit cash, and then what am I going to be crediting here?
The accounts receivable.
Accounts receivable. So when you have this over here, and so this is going to be to collect. So over here, when I have this situation here, this was to collect accounts receivable and previously written on. So I reinstate the receivable. And then over here, I'm going to be collecting the cash. So when I look over here in terms of what we're doing, this is going to be the on 7/1/17. This is going to be collecting AR previously written off. It's the write off of AR. Okay, so are we good so far? Does this kind of make sense, or have you been able to watch any of the other videos before coming on?
Yeah, makes sense.
Great. Okay. Jesse, you good?
Yep.
Jesse? You okay?
Yes.
Sounds like a truck backing up. Okay, so the last step I need to do in this question is to determine the amount of bad debt expense for the year ended December 31st, 2017. So my third journal entry that I'm going to need to know how to do is to record bad debt expense. Okay? And how do I record bad debt expense? Well, if I'm writing down bad debt expense, will that be a debit or a credit?
A
How do I
debit.
record expenses?
Debit.
With a debit, right? And just remember over here, DC, ER, assets equals liability plus owner's equity. So I'm going to debit bad debt expense, and I'm going to credit my allowance for doubtful accounts. So this is to record bad debt expense. Now, in terms of figuring out what this number should be, is I need to look at my allowance for doubtful accounts and ask myself, is this T account balanced? Is my T account here balanced, or do I need an adjustment? So does 8,000 minus 2,000 equal 36,000?
It's not.
It does not. So right over here, what I'm going to do is I'm going to basically solve for X. So 5,000 plus 3,000 plus X minus 2,000 is equal to 36,000. Maybe are you following along?
Yeah.
So what I need to do is I need to balance this T account. So this is a contra asset account. As such, it will carry a credit balance. So over here, I've got 5 plus 3 plus X minus 2 gives me 36,000. So this will be 6,000 plus X equals 36,000. X is going to be equal to 30,000. And if I think about this here, does 38,000 minus 2,000 give me 36,000?
Yes.
Yes. This is my bad debt expense. And so what I'm going to do over here is I'm going to basically credit this for 30, and I'll credit this over here for 30,000. Are we good?
Mm-hmm.
Mhm.
Okay. So what's the next type of question you would like me to cover?
I have a question.
Sure.
So if you compare the spreadsheets for the AR More questions and the AR ADA, how come one we don't have to, I guess, do the T accounts for accounts receivable, and another one you have to?
So, right. Okay. So in this one here, right? So there's a great question, right? When we're going and doing allowance accounts, right? When I'm giving you something like this,
Mhm.
giving you a write-off of a receivable and something like right here, there's going to be one question that's going to be asking you to do journal entries and possibly a balance sheet presentation. That kind of question is here. The next type of question and what you might be referring to is something that looks like this, correct?
Yeah.
Yes. Okay, so this is what we call a multi-year accounts receivable question. So if you want me to, I can go through and do this type of question right now so you can kind of see how it works. Is that what you'd like to cover today?
Yeah.
Okay. So let's go through here. Jesse, are you good with that?
Yep.
Okay, great. So let me just go ahead and copy this over. Okay. So the way this type of question works is I would be giving you, right? I'll basically say, here's the name of the company, here's the transactions, and this is a multi-period transaction question. So what you'll be required to go through and do, and this is kind of what Tivi was alluding to, is that for this type of question, you will need to be using T accounts to kind of figure out what some of these numbers should be. And what will happen is that on your exam, you'll be given over here basically a list of various different transactions. What you'll then need to go through and do is on the opposite page, I'm going to be giving you T accounts. And you'll see T accounts over here for accounts receivable. And then over here for the allowance for doubtful accounts. And this here would be for 2019, 2019. And then you get down to the next year, which would be for 2020. Okay. So during 2019, Boilers Inc. started business and had the following transactions during 2019. It had $600,000 of credit sales. So my beginning AR, because it started business this year, was 0. Then for letter A here, I had 600,000 of credit sales, meaning I debited accounts receivable and I credited sales. Okay. So letter B, I collected 250,000 of the credit sales. So what kind of impact would that have on these accounts? What would I change up here? And by the way, if it makes it easier for us, what I can do is I can write out other T accounts here, such as sales and other things like cash. Okay. So if that makes it easier for us to visualize. So if we had credit sales of 600,000, then I would be debiting AR, crediting sales revenue. And then here, if I collected 250,000, what would I do here? What do I do if I collect 250,000?
You credit it in accounts receivable.
A credit accounts receivable for 250. And then what do I debit? So if I collected $250,000 cash of the credit sales, what do I do? what would I be debiting? So if I collect accounts receivable, what am I receiving?
Cash.
Cash right over here. So for cash, I would be debiting this for 250. Okay. Again, you do not need to have the cash in the sales T accounts, but if it's easier for you to visualize it this way, whatever it takes. Okay. Now, letter C. I wrote off a $10,000 receivable from Jayhawks Inc. So when I write off a receivable, what's my journal entry?
Credit 10,000 in accounts receivable.
Okay. And then what do I debit? When I'm writing off an account receivable, what do I debit?
ADA.
ADA. It's always the same. What's very important to remember is that if we write off a receivable, this will always be the journal entry that we're going to be using. I debit the allowance for doubtful accounts and I credit AR. So over here for letter C, I'm debiting my allowance for doubtful accounts for 10,000. Okay. Then it says here, OI estimated that 15% of its accounts receivable would not be collected. So what I need to do at this point in time is to figure out what is the ending balance in my AR. So right here, my accounts receivable ending balance is going to be $340,000. Does that make sense?
Yes.
Okay. So what I'm saying here is that of this 340,000, how much will I not be collecting?
Multiply the 15% with the accounts receivable.
Correct. I'm going to take 340,000 times 15%. Okay. So my allowance for doubtful accounts, because this is the first year of operations, had a 0 opening balance as of 1/1/19. So when I look at these questions here, the first one is determine bad debt expense for the year ended 12/31/19. Determine the ending balance in the allowance for doubtful accounts, and the ending balance in accounts receivable. So my ending balance in accounts receivable for 2019 was 340,000. My ending balance in my allowance for doubtful accounts was a $51,000 credit. Now, how do I determine the bad debt expense? What did I have to do in the previous question? Is this allowance for doubtful accounts T account, is this account balanced?
No.
No, it is not. So what I need to go through and do is I need to record bad debt expense, okay? So the way I go through and do this, okay? So I had a 0 balance. I have this value here, minus 10,000 equals 51,000. So how do I solve for this? What do I do? I have y, or 0, plus y minus 10,000 equals 51,000. What is y going to be equal to?
61,000.
61,000. So 61,000, or 0 plus 61 minus 10,000 gives me $51,000. So right here, when I'm going through and doing this, right, is 61,000 here this is my bad debt expense. Basically, a $61,000 debit. To record bad debt expense, the journal entry is always the same. I debit bad debt expense, and then I am crediting the allowance for doubtful accounts. Okay. So, are there any questions on this first part here?
No.
Okay. So, let's now go through and do 2020. Jesse, are we doing okay?
Yep.
Okay. This is by far one of the most important problems to make sure that you understand for your upcoming test, which I think is a week from Saturday.
Yes.
Yeah. What's good is you have a little bit more time now between tests.
Mm-hmm.
Is it better pace?
Yeah.
Okay. So right over here. Sorry, guys, give me a second. Okay. So when I'm doing multi-year questions, what I need to go through and do is I need to kind of remember over here, and again, the sales, cash, and bad debt expense T accounts will not be given to you on the test. These two are the only ones I'm really concerned with, is the AR and the allowance for doubtful accounts. So what I need to remember for 2020 is what's my beginning balance in accounts receivable?
340,000.
340,000. The ending balance of 2019 becomes the beginning balance of 2020. Similarly, my beginning balance in allowance for doubtful accounts is going to be the ending balance from the prior year. So during 2020, I had the following transactions. I had $800,000 credit sales. So what do I want to do with those credit sales? What accounts do those go into?
Debit, accounts receivable.
Okay, what do I want to credit? I don't need to credit anything, but if I wanted to, I could basically just go through here and credit sales. But I will not give you that sales T account. It's just to kind of just say, hey, what's happening to AOL? Okay, so I collected in 2020 $600,000 of the 2020 credit sales. So what do I want to do to accounts receivable for the money I'm collecting?
Credit.
I'm going to credit accounts receivable. This is going to be letter B for 600,000. If I'm crediting accounts receivable, what am I debiting?
Cash.
Cash. Okay. Similarly here, I'm also collecting 300,000 of the credit sales from 2019. So this will be a credit to AR and then a debit to cash for 300,000. Okay. Okay. Now, this next one here is I wrote off a receivable of $20,000 from Commodores Inc. So, what do I do here for letter D?
Credit 20,000.
To which account?
Accounts receivable.
Okay. 20,000 to accounts receivable. For every credit, I need a debit. What account do I want to debit?
ADA.
ADA. That's letter D. Letter E. I collected 30% of the Jayhawks receivable that I had written off in 2019. So, what happens when I collect a receivable, right, that I had previously written off? What would my journal entry be? Let's go over here. So when I have a receivable, basically when I collect AR, prior write-off, the first thing I need to do is I need to reinstate the receivable. The way I'm going to do this is I'm going to take 30% times what dollar amount? How much did I write off in the previous year?
$300,000.
Was it 300,000 or how much did I write off from JI?
You wrote off 10, so it'll be 3,000.
I wrote correct. So right over here, I'm sorry, Tiffany, you may have actually said that. I thought you may have said 300,000, but I think it's only 3,000. So right over here, this is 10,000, 30%, or 3,000. So this is my first part of letter E, right? So for every debit, I need a credit. And what I'm going to do over here is I'm going to credit my allowance for doubtful accounts for this $3,000. However, I'm not done. The next thing I need to go through and do is when I collect a receivable that I previously wrote off, I reinstate the receivable, and then I show the cash being collected, which over here would be a debit to cash, and then a credit to accounts receivable over here for letter E. Okay? So, does that make sense?
Yes.
Yes.
All right. So, now that I've input in all of the transactions, right? What I now go through and do is I'm going to total up to see what is the ending balance in my accounts receivable account. So right over here, my ending balance in accounts receivable is 220,000. So right here, the answer to this question so my ending balance for AR will be 220,000, and this will be a $220,000 debit. So I now need to figure out what is the ending balance in my allowance for doubtful accounts. So what should the ending balance be in my allowance for doubtful accounts? How do I? What does letter F tell me?
The 25% times the accounts receivable amount.
Correct. So over here, this is going to be 220,000 times 25%, 55. So my ending balance in my allowance for doubtful accounts is going to be a $55,000 credit. Okay. Now, is this allowance for doubtful accounts, is this T account balanced?
No.
No.
No. So what I need to do is to figure out what do I need to add here, less 20 to get to my 55. So I'm going to take 51,000 plus 3,000 plus Z minus 20,000 is equal to 55,000. So this is going to be 34,000 plus Z equals 55,000. So Z is going to be equal to $21,000. So if I put 21,000 in here, and let's just try to figure this out. So I've got 51 plus 3 plus 21 minus 20 gives me 55. I know that I've done work correct. Okay. Does that make sense?
Yes.
A lot of information. You have to practice this problem. The way I make this problem more difficult is I add on another year.
Yes.
That's what I do. So on your own, what you can figure out is another year to this or make it more professional. But that's what I would do.
Would we have to do journal entries for the multi-year problem besides the T accounts?
Multi-year, I ask you, and the reason why I'm putting debit is because when you're giving your answer, basically it'll say circle 1, circle debit or credit. So tell me the bad debt, circle it debit or credit.
Mm,
Does that make sense?
yeah.
So it'll say here, look like this. So what you would do is you would put in the dollar amount here, and then you would circle one of these as appropriate. That's what you would do. Does that make sense to me?
So you would input.
So what I'm going to do is that the question will look like this, right? Give you information that looks like this. Then I say, what was the amount of bad debt expense for the year ended 12/31/19? Write 61,000, and then you would circle the debit.
Oh, okay.
Okay. And so right over here on the opposite page, this is where you would be showing your work. Does that make sense?
Yeah.
Okay. So for today, I've got time for about one more question to go through. Okay. And have either of you started looking at the any of the depreciation questions?
Yes, but I don't really remember which one is which.
Okay, so which one do you want to go through? Do you want to go through? Is there one you want to go through? What would you like to do?
I kind of want to know like which one is it better to go over first, because when I was going through the videos, I was kind of confused on which one I was supposed to look at first.
You're going to be looking at all of them, right? And so let's just kind of like take a step back and kind of like talk a little bit about depreciation and the like. So the depreciation questions you've had to date really have dealt with straight line. And this is really from exam 3, right?
Yeah.
Exam 2. Okay, and when you record depreciation, you're debiting depreciation expense and you're crediting accumulated depreciation, right?
Mm-hmm.
Accumulated depreciation is a contra asset account, and this is always the way that we record it. We debit depreciation expense, and we credit the accumulated depreciation, right?
Right.
Or so when we're dealing with, can you guys hear me okay?
Mm-hmm.
Can you hear me now? Can you hear me now?
Yes.
Okay, so when you're going through, and when we look at, there's several different ways you can do it. There is straight line. meaning that the same amount of depreciation is taken each, or I should say, it wouldn't be each year, but you could even say like each month. I'd probably say each year, right? The only way that this would not necessarily be applicable is that if I purchased equipment, say on September 1st, then I would have to take the full year amount and multiply it by the months that I used it. So if it was something like, if I bought equipment on September 1st, I would debit depreciation expense, and then basically have to multiply that year amount by 4/12. The next one over here is units of production. When I'm doing units of production, I don't look at it as a function of time. Rather, what I'm doing is I'm looking at the depreciation saying, okay, this piece of equipment can last me for 100,000 units. So when I go through here on something like this, I basically, as I produce a unit, I take a certain amount of depreciation. So that's what I do in units of production. The next one is called double declining balance. And when I'm doing double declining balance, this is an accelerated method of computing depreciation expense. In all of the methods that we go through and use, we always are depreciating the same amount, which is going to be my acquisition cost minus the salvage value is going to give me my depreciable base. And what I mean by that is that this is the most amount of depreciation that I can take. And what you have to be very careful about is that in the questions, I will try to make you over depreciate the equipment that you're doing. So it's just something to kind of consider as you're going through and doing these types of questions. So again, what I would do in terms of going through and, trying to figure out is like, okay, what do I go through and like, what am I, how do I go through and take a look at this? You can start maybe with a straight line and then maybe go over here to units of production and then go over here to double declining balance, right? And then the other things I need to be concerned with is what happens when I sell equipment. And then what also happens if my equipment is going to be lasting longer than I expect it to do. Okay?
Mhm.
For the change of estimate, do you always fully depreciate with the double declining balance?
So what a change of estimate means is that if you look at intuitively, if you look at these amounts, right, and it's like really, it's acquisition cost, right, which we know that's what it costs us to acquire the equipment. My salvage value, my salvage value and my estimated useful life are both estimates. And so when I'm going through and doing depreciation, I can never depreciate the asset beyond its salvage value. And what you're going to do is when you have a change of estimate, you depreciate it the normal way up until you get the change of estimate. Once you figured that part of it out, then you take the number and depreciate it with that in terms of doing it. Does that make sense? And Tibi, what I would suggest that we do, right? So your exam is a week from Saturday, right?
Yes.
What I would suggest that we do is that if you guys send me an email and I can try to set something up. Jesse and Tibi, are you both available on Sunday night?
I think so.
Late Sunday night.
Like around like 8 o'clock?
7, 8.
Okay, yeah, so let's try to set up something for your class on Sunday night. So what we can do is go through the depreciation questions, because I think you would probably find that helpful. There's some pretty good videos on there in terms of the review sessions that I've done previously for basically for depreciation expense. But if you want to kind of meet up and kind of go through some problems, I'd be more than happy to do it with you. And I think just to kind of remember in terms of, if you take a look as far as, and again, this is for your class section in particular, if I look at what will be on your exam, right? And this is over here for exam 4. Okay. If I go over here, this is by far the most important guide you can be using, right? So 30 point bank reconciliation. We went through and we covered that. Short answer question, accounts receivable. We really didn't talk about that, but we can do that on the next video. 15 points, bad debt expense based on an aging of accounts receivable. 50 points, multi-year AR question. That's what we just went through and did. So the other ones I'm going to have is a 25-point question or around that, with straight line calculations with journal entries to record depreciation expense. 15 points, double declining balance depreciation calculation. And then an asset disposal. When I sell equipment, what's that journal entry that I'm going to go through? So we have just covered, believe it or not, in this very short period of time, about half of your exam, which is really this part here and then these two parts here. Does that make sense?
Yeah.
So what I would like you to do is to, after I'll post this up on YouTube, but if you can, go back and practice the bank rec, practice the accounts receivable questions from the video, as well as what I have as problems I've posted over here in the modules. Right? So go over here to the modules for exam 4. Right? There's some different lecture notes over here, and go through and try to practice using these different questions. Right? So go through and practice those types of questions. Then what you want to do is practice the double declining balance, the units of production, and straight line. Try to learn it on your own. And then basically with the supplements I've given you. And then basically on Sunday or whenever we are able to meet, we'll go through and then do another conference Zoom for that.
Okay.
Okay.
Hey, Tchaikovsky, real quick, if you look at the spreadsheet for the more questions, like, you know how at first I was asking how, when would we need the T accounts, and it was actually because we would needed to do it for the multi-year. But if you look at the slide for the more questions, we do journal entries and also the T accounts, but
right. So the only thing, right, and just to make this clear.
Yeah.
If you look at if you go back over here to your exam breakdown, right, and this is only for my accounting, I want to be really clear on this, because if there's another 1A section that's listening, this is only for my online class, okay? So when you're going over here, and I'm like looking at what's going to be on your exam, right, and I see this right over here. So 30 points bank rec, right? You're going to have to reconcile the account and then prepare the appropriate journal entries for the company. We don't do journal entries for Wells Fargo. The next one here is bad debt expense based on an aging of accounts receivable. For this question here, I'm going to require you to go through and prepare journal entries. So when you look at this AR aging question, you'll need to go through and prepare journal entries. Now, in the course of going through and doing this question, in order for you to figure out what your journal entry is going to be in order to record bad debt expense, you're going to have to use the T account to analyze the allowance for doubtful accounts. Does that make sense?
Yeah.
Okay, now for this one here, for the multi-period, all I'm going to give you is AR ADA, AR ADA. I'm not going to give you the remaining of these accounts. You will only have to show me, because I'm going to ask for 3 things. I'm asking for bad debt expense, your ending balance and the allowance for doubtful accounts, and the ending balance of accounts receivable. Those are the only things I'm going to be asking you for each one of the years that we're going through and doing. Does that make a little bit more sense?
Yeah, so for the aging and the percentage, we would just have to show the journal entries and also the amounts for ADA.
Correct.
Okay. Yeah, makes sense now.
Okay, cool. All right, Jesse, any other questions? We'll wait till Sunday.
Yeah.
Very cool. Well, I hope you found this helpful. Don't forget to like and subscribe. And I will see you on the next accounting video. Have a great night.
Thanks, Sikorsky.
No worries. We'll see you soon, okay?